Good afternoon, everyone. This is T3 Live Editor-in-Chief John Darcy here to bring you the daily recap. And what a day it was in the market today. We had that big gap up this morning that we talked about in the morning call, and we talked about Wednesday's high as an area to watch in the S&P and in a lot of stocks in the market to see whether we got rejected by that, whether it's turned into a resistance level, or whether it turns into a trampoline and an area that when we break through it, it leads to a jailbreak for the shorts that are running for the hills. Somebody said on Twitter today, I like this analogy, that it was like you locked everyone in the barn and you lit a match and you lit the barn on fire, and everybody all the shorts just went running, trying to get out of their stocks as quickly as possible. And so we almost matched the size of the pre-market gains during the session, and the result was one of the biggest gains of the year. I think somebody said it was the largest, I think I saw on CNBC, the largest gain since January, and one of the top 3 gains we've seen in the last 18 months or something like that. But really impressive gains in the S&P today, and then obviously in a handful, not a handful, 96% of the S&P was higher, so you had great moves across the board in a lot of different stocks. And obviously with today's huge gains, you saw a lot of the technical damage that has been put into a lot of charts get repaired. And we try to do our best to provide you a roadmap for this potential type move. We have continued to lean to the long side despite the fact the market's been dribbling lower. Despite the fact that Washington's been a circus and there's been all this headline risk. This year especially, it's been impossible to press shorts to the downside on weakness. So after reaching some oversold levels over the last few days, the market was ripe for this type of move, and we finally got that headline that there's the potential for a short-term debt ceiling increase that conservative Republicans are now supporting. The president has said he would support that type of short-term increase to buy more time to potentially come to a bigger agreement. So it sounds like a deal is close to getting done, but those headline risks still are on the table. But for now, the market's definitely done a long way towards repairing a lot of the damage on the charts. Take a look at the chart of the S&P to give you a visual of that. As you can see, we had that huge gap up this morning. We talked about contending with this breakdown level, this pivot breakdown level, and Tuesday's high. Obviously, we didn't have any trouble at all breaking above that. Broke back above the 8 and 21-day moving average, and just with today's gains alone, you have both of those moving averages now curling up because we do use the EMAs, so the more recent price action is weighted more heavily in that MA. So those moving averages are looking a lot more healthy, obviously. We broke this accelerated downtrend that's been in place for the last few weeks, and now you could continue to see shorts on the run, the ones that didn't cover today, but who knows. I think if you were long going into today, I think you take your money and you're a little bit happy with it, and you don't put yourself at the mercy of Washington, which still could muck up this situation. I wouldn't put anything past them at this point. But taking a look at a few other index ETFs, take a look at the IWM, the Russell, huge gain today. It had seen more damage than some other groups and indices over the last few days, but it also reclaimed almost all the losses from the past 2 days, or it did reclaim all the losses from the past 2 days. And almost all the losses from 3 days. So 3 days of really harsh downside action erased in one huge bounce. That's really impressive. Not exactly the type of calculated technical behavior that we look to capitalize on here, but impressive action nonetheless today. And then you talk about the Qs. We talked about all the carnage in tech today, erased almost all those 2 days of losses. I mean, on Tuesday, you had that monster 2% down move, and then yesterday we continued to the downside. We did close off the lows, but that's just an enormous move today, and the Qs almost erasing all of those losses. So, like I said, erratic type action, not exactly the most calculated setup. It was an overnight gap and go to the upside. Hard to chase the gap this morning, but if you played select stocks, I think there was a potential opportunity to see where the relative strength was over the last few days and potentially set yourself up for a move like this in the broader market that, once the market finds its footing, we're looking for stocks that could potentially be the first to go. And one of the ones we talked about, didn't have a ton of intraday strength, was Apple, but one that I still think looks good. Yesterday it had a nice red dog reversal. Today gapped up small, didn't quite follow the strength of the market, but this downtrend is still in place that we're going to be watching for a potential break. Could get some momentum if it does break that downtrend. So obviously, an agreement out of Washington is a positive thing for all stocks and Apple as well. So we got that October 22nd product announcement. Could be some buzz heading into that. One to keep an eye on there. Facebook's one that I talked about. Facebook's a little bit different than a lot of these other highly valued tech stocks in my opinion, because the fundamental story to me is a lot more compelling for Facebook than it is for Yelp and Pandora and a lot of these other names that have become completely blown out of whack with their valuations. And Facebook is one that also was trading near its 21-day moving average despite some heavy losses sustained on Tuesday. And yesterday it did close below its 21-day again, but it closed well off the lows. It looked like it wanted to stage a red dog reversal, but it just wasn't able to finish the job and get back above Tuesday's low on the close. But today, as you can see, huge move to the upside. It's one that I would continue to look to buy dips in, one that I really believe in both the fundamental and now the technical story. So really impressive action there for Facebook. Lululemon, another one we've been talking about, is one that could be one of the first to show strength when the market finds its footing, and nice action there today. I mean, I could go through hundreds of charts and show you really impressive bounces today, but what I'm going to focus on is stocks that we've been talking about and highlighting that you potentially could have taken advantage of just as a lesson for the future. Lululemon, I still think it has more upside too. This is not a looking backward type thing. I think Lulu, if the market continues to firm up and they do get this deal done, if you look at this pivot high here at 77.75, an area you could potentially look for more momentum through. Whole Foods Market, one that I really loved this setup when we highlighted it early this week and last week on Off the Charts, and it was disappointing to see that breakout failure and then yesterday's weakness, especially yesterday's weakness given the fact that the market wasn't down as much as it was Tuesday. But we did see a nice bounce off the 21-day moving average, and then today we got a really big igniting move that almost led to a breakout. Obviously, it's got this tail now as some resistance from that breakout failure on Tuesday. So we'll be watching the high from that day, which sits at 60.60 for potential momentum in Whole Foods. This is just an example of how the market can be tough sometimes, make it hard on you. You can have great ideas, but the market makes it a little bit difficult to execute on those ideas sometimes. And this is an example with Whole Foods. Maybe if you didn't have a lot of risk tolerance, you might have got stopped out of this name, and then finally now it looks like it's ready to go. But nice action there, one to keep on the radar. Boeing, another one that we didn't highlight in any of our newsletters or anything like that, but I think given the strength of today's move and the pattern, I think it's one to keep on your radar. If it does get some sideways action, maybe if the market rests and wait for this resolution to actually get hammered out in Congress and passed by the president, this could be one that makes new highs given the strength of today's move. Really impressive. After yesterday, it looked like it might fall off a cliff a little bit. Major reversal back above this downtrend line, and now the only real resistance in the way, 119.89, and then the pivot high here to new highs is 120.38. So those will be your new action areas for Boeing, one that has a nice setup, I think, despite the fact that obviously a huge move today makes it a little bit tough to chase. Some sideways action would be very nice there. Another one that I've talked about a little bit on Twitter, and I'm sort of kicking myself because I'm not involved in this trade and I love the company. When it gapped down on earnings here and continued to the downside, I was talking about wanting to buy it in the $50 area. Never got down to the area where I was trying to be ultra patient in this idea, which I will always be okay with missing out on a move rather than buying too early on a move and seeing a stock go against me. I was trying to be ultra patient with this CRE and look down in the $50 area as an area to potentially buy the dip. Didn't make it down there. Then it got a few upgrades, and bada bing, bada boom, it's back up here near highs, $76. The pivot high is exactly on that figure. So after breaking this recent downtrend, accelerated downtrend that was in place over the past week, CRE made a really nice move above it today, and I think could challenge these pivot highs here. 74.06 is the pivot from this day, October 4th. So one to keep an eye on, just another example of a stock that showed really impressive strength on the snapback today. And then I'll highlight a few that we highlighted in Off the Charts last night. I think if you get Off the Charts, our Off the Charts newsletters, our Trade Ideas newsletter, $30 a month, $1 a day, I think it's worth its weight in gold, even though gold's not really worth that much right now, but we'll get into that a little later in the show. Anyways, I think Off the Charts is a tremendous resource, and we're also putting some more work into unearthing some setups that are a little bit more off the beaten path. We always highlight tech stocks, high beta tech stocks, and we do a lot of sector analysis and Off the Charts, but and we also, I think, do a good job of mixing up some new setups in there every once in a while. But last night we went even more off the beaten path given the erratic action we've seen in the market and highlighted some setups that worked out really well today. And it's just an example of some changes you might see to Off the Charts here going forward. But an example of that is AMAT, Applied Materials, not one that we'd looked at in a while, symbol AMAT. Nice gap up. I mean, this is our bread and butter setup, you could say, from our active trading course, one that we absolutely love. You saw it in Facebook after its earnings gap up. You've seen it in Netflix several times after earnings gap ups, but AMAT gapped up, held the gap, sideways consolidation, and now a really nice move today above the 8-day moving average, as we highlighted it last night at the low end of this range. And then your next action area would be this high pivot here at 1788. So something to keep an eye on, something I think will continue to get momentum if the market can hold its footing. BMY, Bristol Myers Squibb, another one we highlighted, an upper level base that had formed after a nice run up in September. It made new highs today. Really impressive momentum there, and could get more upside after a close at new highs today. So another great setup from off the charts. A great job to the team that puts that together, of which I'm a part. But Cube, a lower volume name, a thinner name, but still does about 1 million shares average daily volume, so qualifies on our metrics and this type of stocks that we look for. Really nice upper level consolidation. It had put in some sideways action over the past 2 weeks. Found support at its 8-day after the 8-day caught up and broke out today. Did close a little bit off its highs, but nothing to get you too worried. And I think if the market continues to hold in well, I think Cube will continue to the upside. It could continue to the upside, in my opinion. You hate to look around the market today for potential weakness, but you could say Tesla. Tesla finished up today 2.5%. So you're probably saying, John, how are you going to call Tesla weak? It was up 2.5%. But the action during the session was very unimpressive after the gap up. Percentage-wise, it is a more high beta stock, so the moves are going to be exaggerated. But like I said, if you go back to the chart, you can see it didn't go anywhere during the day after the gap up, put in a doji candlestick while the market had a big time gap and go to the upside. This is a red flag to me in Tesla. 3 straight days of closing below the 21-day moving average. First time that's happened in 2013. Moving averages are now curling down. I think the air is starting to come out of this one a little bit, and I think even with some sideways action, maybe a little bit more of a bounce into that 8 and 21-day moving average that are curling down now. I think you could see some more downside in Tesla, potentially a short setup to keep on the radar, but it is in a strong macro uptrend, really resilient this year. So if you're going to play that sort of as a counter trend type trade, counter the intermediate term trend but with the short term trend, I think you keep your risk management tactics really tightly in place there. A couple other things, IBB, the biotechs, one area we talked about of extreme technical damage. And look at that reversal in the biotechs today. Erased all of yesterday's losses, got into some of Tuesday's candlestick. I mean, that was really, really violent downside action in the IBB in biotech stocks over the last few days. And so today's candlestick will go a long way towards repairing some of that damage. Back above its 50-day. Now the next obstacle will be these 8 and 21-day moving averages, EMAs, that are now curling sharply down. So it'll be interesting to see if the biotechs can continue to find their footing, continue to rally. Gold, like I said, gold, worth its weight in gold. We might have to change that saying because gold is performing weak in almost every market environment. The market was down big on Tuesday. Gold still finished negative, narrowly negative, but it finished down when most people thought it could potentially rally big. Then the following day, just with some sideways action in the market, gold gaps down big, puts in a little bit of a doji, but finishes with pretty stark losses there. And then today, with the market strength, gold accelerates to the downside. Looks to be challenging this pivot low around 123.81, something that I'm definitely very bearish on all time frames, and I think could eventually get back down to this pivot low that's here around 114, 115. And that'll about do it. We went over some stocks, went over some indices, painted a picture of that really impressive rally we saw in the market today. This type of volatility, like I talked about earlier this week, we sort of become desensitized to it. I know this was one of the bigger percentage moves we've seen this year, but we're sort of used to this erratic headline type gap up, gap down type action. So you have to embrace and adapt to the environment that you live in. And the way you do that is you identify relative strength and relative weakness. You steer clear of the indices a little bit. Maybe take a little bit of a contrarian view when everybody seems to be thinking the same thing in the same direction, which it sort of got that way with bearishness, talking about the debt ceiling and things like that. Anyways, you gotta protect yourself in these types of environments first and foremost. And if you didn't make a killing today on this move, don't beat yourself up over it. These gap ups after big down moves like we saw this week in the market, tough to navigate. keeping yourself out of harm's way is the first step to success as a trader. So if you kept yourself out of harm's way, didn't chase shorts, pat yourself on the back for that, for starters. This has been John Darcy here for your daily recap. Tomorrow morning, I will not be here. I'm not sure who's filling in, but be another voice here giving you a morning call. Another voice for daily recap tomorrow with Scott still out of town. But I hope you have a good weekend, good Friday, and we'll see you back here on Monday with Brittany.